guys. So I'm getting hungry here. So let's talk about a restaurant, Sweetgreen. And we said here, no one we know has gone to Sweetgreen. I think you said there's one in UTC.
I've been once.
Oh, you have been once.
I was not that impressed.
Oh, okay. Well, let's talk about the stock because you won't be very impressed here either, I don't believe. Sweetgreen, their symbol is SG. They're a restaurant company in the restaurant industry. The short and the float, 31%. That's huge. We do see the PE ratio. Oh, no PE ratio means no earnings over the last 12 months. Price to sales, 1.1 versus 2.3. Price to book value looks good, 1.8 versus 15.4. But price to cash flow, 343 versus 15.8. So not so good there. They have no earnings growth of last year. Sales are up 2.4% over last year versus 6.8% for the industry. They do get from the analysts a 3.5% 5-year growth rate on the earnings, but industry is at 2.3%, so not too exciting there. Do not pay a dividend. The balance sheet, let's see, 1.3 on the current ratio. That is better than the industry. Debt to equity 0.9 versus 1. That's okay. Net profit margin, here could be the problem, a negative 16.5%. Return on equity, a negative 28.8 versus a negative 592 for the industry. Wow. And then the return on invested capital, a negative 15.1. Free cash flow, a negative 109 million, I think that is, versus positive 3.2 billion. This company, and I think we're going to talk about it because it's fallen a lot, but it seems to be another one that is just doing terrible, but no time for a turnaround.
Yeah, I mean, you look at the current price here for Sweetgreen, again, their ticker symbol SG, $6.12. And I mean, you talk about the performance of it. I mean, the 52-week high, $45.12. 52-week low here, $5.14. Their all-time high, that was back in 2021. Closing price here, $53 a share. So, I mean, it's just really, you look at the chart, it looks like they IPO'd back in 2021. Looks like in November. And their all-time high closing price was in November of 2021. So one of those IPOs that did not work out for people. And unfortunately, you go forward for this business. You go out here to December 2026. They're estimated to lose 78 cents a share, so can't even come up with a target sell price. This is one, again, that I just would not be buying. And interesting thing about them is I saw them on CNBC is that they're really trying to lean in almost to robotics. They have what they call the Infinite Kitchen. They acquired a robotic startup called Spice, and they built that Infinite Kitchen where they can supposedly make 400 to 500 bowls per hour, which is significantly more than a traditional manual line. But the problem is if you don't have consumers for 400 to 500 bowls, well, you're going to have an issue.
And also, too, you got to make good tasting quality food. You can make a lot of bowls, but if people don't like it because it doesn't taste good, I don't care how many you make, they're not going to buy. You said they're lacking consumers.
Yeah, and I mean,
I'm going to have to go there maybe this week.
When I went, and this is a couple of years ago, I was like, oh, it's kind of trendy little spot, new, had never been there. It sounded like it would be maybe healthy, and I think it is. I don't know.
It's supposed to be healthy.
But it was like, I just wasn't that good, and it was expensive. And I guess I'm not the only one that feels that way. I kind of was curious where they are in San Diego. I was looking up at a couple locations. This one down in kind of Mission Valley, it looks like Google star rating 3.8, UTC 3.4. The one up looks like one in Carmel Valley, 3.2. Not good star ratings for Google reviews.
But they're making those bowls pretty quick, aren't they?
Yes. I think instead of focusing on how many bowls they can make per hour, they need to focus on how to make their bowls taste good first.
and we bring this one up, and we don't know what these companies look like before we look at, but we thought maybe an opportunity because of the big pullback. But this also, too, explains why sometimes you just don't jump into something with a hype. You get burned on it.
When I like kava, kava tastes good. Too expensive. This doesn't taste good and not worth the buy.
Not worth the buy.